Hello and good afternoon. Week number 21. Looking ahead, what are the market movers and what can we expect? The first pair I like to look at because it was incredibly bearish I should say probably all month, was GBPAUD. It did bounce back momentarily on the back of yield spreads bouncing back up. So you're looking at the weekly. I will be changing this to the daily to make a bit more sense. So GBPAUD yield spread, or gilt Aussie yield spread, I should say, started rallying, and that is causing a halt in the initial decline we are hoping to see from GBPAUD. The jury's still out how this will evolve, but the basic premise was that market started to price in more rate hikes by the Bank of England, and that is helping the pound lifting. So we have to be cautious in terms of how we're going to trade this. And you can see it's been extremely choppy as well. My main or key core idea was to short this towards this gap close and find new yearly lows. However, right now there might be the timing might be thrown off a little bit because of some new developments in terms of what the Bank of England will be doing. Similarly, can be said about pound, dollar, and gilt treasury spreads. So if I bring this up, we should be this chart over here. You can see the same here. So yield spread started bouncing and GBPUSD with it. It is not exactly clear if this yield spread bounce is finished yet, and I have to take into consideration, if I have to go down to a smaller time from GBPUSD, there's an area of key interest from some past activity in terms of London fixes, and that is around this area. If we get to see pound dollar climb above this level, which I think can happen next week. So if you see it climb around above these levels and defend under here, we could expect this to keep rising for a good another handle. The sentiment for this is not there. So if you're looking at sentiment for stocks, it's bearish. If you're looking for sentiment for pound, it's bearish. So market macro sentiment is not in favor of this move yet. But if you get see this this climb above the 25 handle and establishing a zone, I'm confident it will start continue rallying, as there's a lot of buildup of short orders sitting here that could get wrecked in the aftermath of these levels giving all up. So that is something we need to keep an eye on as we are navigating next week. We are right now in a scenario where market sentiment is extremely bearish, but price action is showing you some reversal. So we're all a little bit on the edge here, which way. There's going to be some big winners and big losers, not only for equity bulls, but also in the FX markets, and those that are dollar bulls. There's going to be big winners and big losers in the next 2 weeks. But it's not exactly clear which way they should go. Again, if you take our yield spreads as a guide, yield spreads have really rounded off, and that's how you see that dollar is depreciating the last couple of weeks. I should say last week, a week before, they were still quite strong. And again, the macro sentiment for this is not really coming together yet, but prices are turning. There's going to be the push between prices are going to win, or is the macro theme going to turn around to give this another push higher? Is yet to be seen. It's not really an area where I love to get engaged with this quickly just yet. So it will be a little bit of a wait and see, and we're taking the sessions and the sentiment each day by day to see where we're headed. In terms of yields, we have some interesting figures to work with. So Japanese yields defending fiercely, or Bank of Japan is 0.25 level. On the 10-year yield in the US, we saw the 3% getting solidly rejected. I should say three and near a quarter, but it is expected that this could round off again and come up. In terms of yen as well, if you are trading yen or any other yen pairs, you'll be closely correlation with what yields are doing. So as yields come down, expect USDJPY to come down with it. And if yields bounce back up, expect USDJPY to go back with it as well. This is what analysts are expecting. Analysts are saying if you get to see, let me draw this out with my tool. Analysts are saying if you see 130 level on USDJPY again, start shorting it, as it's likely going to be the peak. It will be time to reload on your shorts. That's the idea right now, as analysts don't see that the 10-year yield hugely outperforming these current peaks. So that seems to be the peak. And if you have a look at inflation expectations, that likely kind of peaked as well, and all plays into each other's hands. So I'm going to quickly show you inflation expectation as well, just so you have a better vista of what is driving current environment. The 10-year inflation expectation dramatically came down and has dragged pairs like AUDJPY with it. So I've showed you this chart before where overlay AUDJPY with 10-year inflation expectation. And it's been a pretty neat correlation for a very long time. And I'm not expecting this to break. So we saw a dip lower, but AUDJPY has not reflected that yet. I would like AUDJPY to do that as we move into the next week. In terms of data, there's loads of interesting data, but not huge data is going to change our thinking. So we have Bank of England Governor Bailey speaking. We have German PMIs. We have ECB minutes, and we also have RBNZ cash rate setting. Here we have FOMC minutes, and I think we have PMIs as well for the United States. So we've got core PC, which is quite interesting. I think we had PMIs as well for the United States. Let's see if we can find it here. Oh, flash services, that's it. Flash manufacturing, PMI and services. So I'll be interested, excuse me, to see how yields and yen react to these, because you tend to see some really strong movements on the yen side around these data points, I should say. Expectation is mostly that the cycle is slowing down, which would lean into that yen should get stronger as in USD/JPY lower, AUD/JPY lower, and that is the direction I will take early in the week, unless there's something to tell me it's going to be different from what we have thought. Again, a majority of our work will be mostly laid out morning to morning. We have to go session by session in terms of where sentiment is. But the overall projection for now is that yields are coming down, PMIs are coming down, yen is getting stronger. That is the direction I will be taking early in the week, unless something dramatically changes the needle. For PCE, it's quite important as well, which unfortunately is later in the week. So it's going to be on Friday. Expect some really strong movements on yen pairs post that data. We had some really strong reactions in previous weeks, which I won't be covering in this video, but they're very evident. And last thing I like to look at is S&P 500 and the VIX, just to point out a couple of levels which are really important for us as we are navigating towards the end of this month. So we have a look at the S&P 500. And I take this correlation with the AUDJPY, of course I don't need it just now. So some that's really important happening right now at S&P 500. There's some that is called 20% decline from peak in market terms is called a bear market. So recently S&P 500 just about nudged that at this level here. This level here nudged that, it bounced down and it rejected that. So there's two ways of looking at this. It's just rejecting it because of a bit of profit taking, or it's just rejecting because this was it and we're about to turn higher. One of the biggest issues for S&P 500 right now was or is high yields, tight liquidity, Fed hiking, and that is eating into the company's profits and all of that. So that necessarily has not changed yet. The only thing that has changed is that inflation has likely peaked, as we've seen data now continuously coming cooler than the previous month, and that could jolt investors to start jumping into buying the dips. But from my experience, you don't see your generic dip buyers coming in until the VIX actually trades closer below 20. And right now we're still at a very elevated level. And my expectation is, and again, you will be front running this story, so it's not a safe trade, but it is an expectation that VIX eventually will come back down and start trading closer to 20 level, which will also mean that S&P 500 can climb again and trade at these higher levels there. That's my expectation. I should say that my expectation was the same in April, which proved to be wrong as we saw some rallies, but they started collapsing again. However, the reasoning for behind that is not dead yet. So I'm still seeing good growth and a lot of these stocks, again, inflation rounding off, that brings a lot of good bout of buying usually around. So that's something to keep an eye out as I navigate for the rest of the week, specifically on Friday. If PCE fails to create any upside surprises. Expect S&P 500 to have a strong finish on Friday. That's all I wanted to cover in this video. There's not a lot of concrete trades out there just yet. So we're mostly meddling intraday. There's a lot of profit taking, a lot of liquidity spikes. So be cautious out there. It's not always the best environment to trade unless you have a really solid sentiment and read. I'll be communicating all trades and the direction we'll be taking on a daily basis in the trading chat room. And I'll be seeing you all there very soon. I wish you a very successful week, and I'll be catching you again next Sunday. Thank you and bye.